Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me as always is Snehi Shah. And this is the show where we take you through all the stocks that are in focus today, either on the back of news flow or on the back of technical charts. So let's get started with the show. But first up, let's take stock of how the markets are shaping up. Snehi, it's a quiet day on D Street. You know, in the first week of December, it's a quiet day. In fact, Nifty is just managing to hold on to this 24,150 levels. It's absolutely flat, actually.
Absolutely, very flat moves coming in, but we did slip into the red territory quite nominally once or twice throughout the course of the day, but right now it's looking like it's holding up pretty well, 1/10% higher. 24,158 is where the Nifty is at. Sensex also very flat but still under the 80,000 mark. India Wix 2.8% higher, almost a 3% spike coming in, so that's going to be an index to watch out for rather. And Nifty Bank, if you take a look at that, a 0.5% cut is coming in on Nifty Bank right now, 51,800 levels, so slightly pressured in trade is Nifty Bank. If you take a look at some other sectoral gainers and losers, Nifty Realty, it's a one-way gain coming in for this index because you have a 2% gain coming in for Nifty Realty, followed by Pharma, Media, IT, Metal, Auto. These are in the green. However, what's not doing well is Nifty PSU Bank, deeply under pressure. 0.7% lower is where this index is right now, pressured by Union Bank, Bank of India, IOB, followed by Nifty Bank. Nifty Bank too under pressure of 0.5%. Nifty FMCG, Financial Services and Energy. These are the counters or other sectors that are not doing well. If you take a look at some Nifty 50 gainers and losers, Ultratech, Grasim, Apollo Hospital, Shriram Finance, JSW Steel, trading with cuts of almost 2% each, and these are the ones that are holding the Nifty up. However, what's weighing on the index? HDFC Life, Cipla, SBI Life, NTPC, IndusInd Bank. All of these stocks are trading with cuts. Lots of stocks to talk about, so let's just kickstart the show then.
All right, for that, let's get Aditya Agarwala, who's the head of research and investments for Invest4edu on the technicals. And from our research team, we are joined by Jinay. Hi, good afternoon to both of you, and thank you so much for joining us today. Let's get started with the show then. Let's talk about the pack, which is is holding up decently well, in fact, in today's trading session, besides realty, and that is the Nifty Pharma pack. All the constituents trading in the green. Cipla is in focus today, but Cipla is the one counter that is seeing a decline of more than 1.5%, and that is on the back of a big block deal that has come in. As many as 1.39 crore shares or 1.72% equity of Cipla has changed hands in 4 block deals. Remember, Cipla's promoters were looking at selling up to 1.39 crore shares or 1.72% of the company's equity via block deals. Now, the offer price was to be set at 1,442 rupees per share, reflecting a 6% discount to the current market price of Cipla shares. That is what the news came in from the sources, adding that the total size of the transaction is likely estimated to be around some 2,000 odd crores. On the back of this big block deal, Cipla is in focus today, trading with cuts of 1.5% for now.
Okay, so that's Cipla in focus. Aditya, let's come to you for your next stock, and that's Balkrishna Industries is the one that you've picked out for us. Now, a lot of auto counters are in focus on the back of auto sales, but the auto component counter, tell us what are the levels that you're spotting for this stock going ahead?
Hi, good afternoon, Sneh. Good afternoon, Ankita. Thanks for coming on the show. This is one stock which has actually held its ground despite the fact that the markets have been correcting big time. It has taken support at the 61.8% retracement level, and from there it's bounced back in trade. Today it's trading above its 200 DMA as well. Decent volumes in the up move. So I think it's a good time to add to the position in this stock. Risk reward is in favor of going long at current levels. On the upside, stock can test levels of 3,100. On the downside, 2,700 is a key support area. So with stop loss just around 2,700, which is about 100-point downside from current levels, one can actually build a long position for a target of 3,100, and if 3,100 is also taken out, I think 3,200 can also be seen on this stock. Now, along with this, if I plot an RSI and an MACD, both are indicating an up move in the stock. RSI has turned upwards from the 40 level, and MACD has already shown a crossover of its trigger line. So both are suggesting a bullish trend in the stock, which is emerging. So at current levels, it ticks all the check boxes and can be bought with a stop loss around 2,700 for a target of 3,100 immediately.
Okay, so those are the levels that Aditya is spotting for Balkrishna Industries. Aditya, thanks for taking us through that. Let's keep it going then. And Ola Electric is a stock to talk about today, because despite starting today's trading session on a very weak note, rather it fell 7% in the morning, Ola Electric shares have staged a strong recovery, erasing all of those early losses. First, the weak move was on the back of November auto sales performance rather muted, where the company sold only 29,000 odd units, a 3% year-on-year decline coming in. compared to 30,073 units sold in the same month last year. Even on a month-on-month basis, the sales have dropped 30% compared to October. However, the stock reversed its losses when CEO Bhavish Agarwal announced an ambitious plan to expand Ola Electric's retail presence from just 800 to 4,000 stores by the end of this month. Highlighting the scale of the initiative, he stated that all the new stores would open simultaneously on the 20th of December across India, calling it probably the biggest single-day store opening ever. And the announcement was well received by the market, fueling optimism around Ola Electric's growth potential and triggering a surge in the company's stock price. 7% lower at one point in the day, and right now 4.5% higher is what the stock is trading.
All right, moving on then. Jinai, you have picked out Cochin Shipyard, another big contract coming in for the company. Tell us the details of the contract and how much is it worth?
Well, definitely, the company has signed an contract with Ministry of Defence. This is an contract for a large Indian naval vessel. To be specific, this is for a short refit and a dry docking at a large Indian naval vessel, and the contract size for this particular project is over 1,000 crores, and the timeline for this project is around 5 months. Now, if you look at the stock performance in the last 10 or 11 sessions, about the stock has returned over 30%, so definitely a strong bounce in the defense pack as well, and also today is trading with a upper circuit of about 5%.
Okay, so that stock sitting solid, locked in upper circuit 5%. Thanks, Jinai, for that. Aditya, coming to you for Divi's Labs now, and you know the pharma, the diagnostic space has been a buzz for quite some time. Tell us what levels are you spotting, because this is a name that we're hearing quite frequently amid on the radar rather of the technical analysts. And last 6 months also the stock has done pretty well, roughly 45% higher. So tell us what's the outlook going ahead.
Still goes very strong, and then if you take a look at, as you mentioned, the chart setup, most of the pharma names had corrected intermediary, but this is one stock which actually held ground and continues to make higher highs, higher lows. In fact, as we speak, it's on the verge of a breakout from a narrow consolidation phase and heading into an all-time high territory. So if it sustains above 6250, I think stock has further legs on the upside and can easily test levels of about 6500, about 6600 on the upside. So that's a big move that I'm looking at, despite the fact stock has already been moving higher. A fresh breakout will rally all the way to 6500 to about 6600 in the stock. On the downside, 6150 to about 6100 is strong area, support area as well. And now if I plot moving average, a combination of moving averages, they are also showing a bullish crossover, and look at the volumes in the recent up move. They support the up move in the stock. So at current levels, definitely it's a trading bet, can go long for a target of about 65 to about 6600 with a stop loss at 6100 on the downside.
All right, that's bullish view coming in on Divi's Labs. But moving on to another account that is in focus today, that's Coal India, which was trading up earlier 2% in the early morning, but has currently given up those morning gains, is now up 0.8%. Nonetheless, it's on the back of the fact that Coalfields Limited, which is a subsidiary of Coal India, had announced a hike in the add-on prices of coal in the Rajmahal area of Jharkhand to rupees 700 per ton from an earlier 450 rupees, which will now earn them an additional 300 crores worth of revenue for the company. Now, the revision is effective from 30th of November, which reflects adjustments in the logistic costs and which are now being passed on to the consumers. Now, the hike is also expected to generate, like I said, around 300 odd crores in incremental annual revenue for ECL, which is contributing significantly to the company's financials as well. On the back of that, Coal India is in focus today.
Okay, let's move on then from Coal India. Aditya, Naveen Fluorine is something that you've picked out on the charts. Now, YTD, the stock is in the red. Last 6 months, however, seems to have recovered. So there is some recovery that we're spotting. But tell us if this recovery sustains going ahead as well, and what are the levels that you're spotting on the chart?
Sneh, I would like to believe that the recovery will continue and would see much higher levels than what it is trading at the moment. If you take a look at all these specialty chemical names, be it a Deepak Nitrite or Naveen Fluorine, they are holding its ground. They hold their ground, and looks like it's going to march higher from here on. Naveen Fluorine has broken out from a downward sloping channel on good volumes. On the upside, it can test levels of 3750, which happens to be the next resistance line. So at current levels, I would be a buyer in the stock for a target of 3750. Stock has broken out from the channel, as I mentioned, on decent volumes. Technical indicators are also suggesting the bullishness, and it's trading above its major moving average. This is 200 DMA, 100 DMA. So I think there is further upside in the stock, and one should definitely hold on to the position, build fresh position in the stock for a target of 3750 at the upside.
All right, with that, it's time for a quick breather, but you don't go anywhere because after the break, we are getting you more buzzers on the other side.
Hi there, welcome back to Market Fatafat. Thanks so much for staying tuned to ET. Now let's keep it going with all the big buzzers, and the next stock on our radar today is Lupin. Now Lupin share price gained after the company announced that it has received the tentative approval from the US FDA for its drug application for sitagliptin and metformin hydrochloride tablets. This product will be manufactured at Lupin's Pithampur facility in India, the company has said in a statement. Now sitagliptin and the metformin hydrochloride tablets are indicated as an adjunct to diet and exercise to improve the glycemic control in adults with type 2 diabetes. The drug has an estimated annual sales of $1,145 million in the US. So it's a big approval that's in fact fallen into place for Lupin, and that stock is doing pretty well, 1.1% higher as we speak.
All right, moving on then from Lupin to Pyramid Enterprises. That's what you picked out for us on the charts. Aditya, tell us, what are you seeing on the charts for this one? Because for Pyramid, a lot of techies have been picking this particular stock for us. Tell us, what are you seeing on the charts for this one? If you look at the price movement for this counter, it has given good gains in the last 6 months, and 1 month also it's seen some 15% gains. Do you see more upside for this counter?
Oh, absolutely, Ankita. In fact, if you take a look at the last 1 week move, it has been phenomenal. And then trade today, it's broken out from a bullish flag pattern. It's a continuation pattern after a sharp up move. Stock usually enters into a couple of days of consolidation, and then you see a breakout again from that consolidation to continue its uptrend. That's what we are witnessing in Pyramid in trade today, a classic breakout from a continuation pattern on excellent volumes. So at current levels, I think stock is an excellent buy. Can test levels of 1300 to about 1350 on the upside. On the downside, 1150, 1140 is a strong support area. And plus, if I plot a moving average and an RSI, all are confirming the bullishness which is there in the stock. So at current levels, yes, I would be a buyer in Pyramid, and I think it definitely has more legs on the upside, at least the levels of 1300, 1350.
Okay, so those are the levels that are just spotting for Pyramid Enterprises. Janai, coming to you now, Dixon Tech is the stock that you've picked out. Very good news flow coming in for its arm. Tell us everything that's been happening with this stock today.
Well, definitely Dixon Technologies is in focus. The company hit its all-time high level. Well, the company's arm Paget Tech Electronics, which is its wholly owned subsidiary, together with Compal, will be launching and producing a mass production of Google Pixel smartphones. Now this is for Compal's designated customer, Google Information Services India Private Limited. We also have a note by Nomura with buy rating with a target price of 18,654. Now what they believe is that company's launch of mass production of this Google smartphones as well as China Plus One strategy can lead to a significant long-term potential from Google. They're estimating roughly about 1500 crores of revenue from this, which is 4% of FY26 smartphone sales. Again, it all depends on the sales ramp up going forward. If you look at stock performance, currently it's trading more than 5%.
All right, that is Dixon Tech on the back of the news flow. But coming to you for the technicals, Aditya, Samvardhana Motherson is what you have picked out for us. And this one's been in a consolidation mode in the last 1 month. In fact, it's seen cuts of almost 12%. So consolidation is what's coming on the charts for this one. Tell us from here on, do you see an up move coming in now?
I think so, Ankita. The stock, as you had pointed out, did see a massive correction from the levels of 210 all the way down to 160 around what levels. It has held ground around its 200 DMA, flirting around the 200 DMA as we speak. I think after this consolidation phase is over, stock will resume its uptrend, very close to major support levels of 155 to about 168 on the downside. So between 158 155 is a strong support area for the stock. That happens to be the prior resistance from which the stock had broken out. Now on the way down, it will take support around 155 odd levels. So given the fact that it's so close to its support levels and stock has already corrected significantly, indicators are trading at oversold levels. I see a bounce back in the stock from current levels all the way up to at least 180-85 levels. So at current levels, I would be a buyer in the stock. The stock was just around 155 odd levels and look for a target of 185 to about 190 on the upside. And I think in about a month's time, you should see those levels into the stock. A good short covering rally can be seen in the next few trading sessions.
All right, moving on from that, Samvardhana, to the cement pack that is doing pretty well for itself. In fact, Ultratech Cement is leading those gains, which is of course also the top nifty gainer for today as well. All of them stock surged over 3%. Because of on the back of a Jefferies note that Jefferies has expressed optimism about a recovery coming for the Indian cement companies in the second half of the fiscal year. Other players include India Cement, JK and ICC that are doing pretty well in the trade today. Also, Jefferies has identified Ultratech Cement as a top pick amongst large cap stocks and JK Cement as the mid-cap favorite, citing bottoming out prices and an improving demand environment as the key growth drivers. And the demand growth has moderately improved in the October to November month, and the recovery should continue into the Q4 on revival in the government capex. That's what the Jeffrey said, penciling in an 8 to 10% volume growth in the second half of FY25 compared to a flat performance in the first half of FY25 on the back of Ultratech and other cement companies are in focus.
Okay, so Ultratech Cement in focus on the back of a brokerage note. Aditya, you've picked out Ultratech for us on the charts as well. Now, last 6 months, not much happening here. Roughly a 10-11% return coming in. In fact, you have a 16% return coming in for the last 6 months. Tell us what's the outlook going ahead, because we have seen a lot of uncertainty coming in the cement space as more builders, more players are entering the space. So tell us what's the outlook.
I think it's a very strong up move that you're witnessing in the stock today. In fact, if I take out ACC and Ambuja Cement moves because of their own reasons, if you take a look at India Cement, if you take a look at Ultratech Cement, if you take a look at Ramco Cement, they have been trading steady. Apart from the fact that there was a minor dip in these stocks because of the market correction, these stocks have held ground. And then look at the way these stocks are bouncing back in trade today. And Ultratech Cement has broken out from multiple resistances on extremely healthy volumes. Look at the kind of volume that you're witnessing in trade today. On the upside, I think so stock 10 test levels are 12,100 to about 12,200 in no time. Maybe in a couple of trading sessions, you can see those kind of levels in the stock. Another downside now, as we speak, stock is already trading at day highs. In where it supports are around 11,400 to about 11,300. So if somebody is looking at a quick trade, Ultratech Cement would definitely be on your radar and ticks all the check boxes. So I think at current levels, one should definitely look at fresh addition in the stock with a stop loss just around 11,400 and look for a target of 12,100 to about 12,200 on the upside.
Okay, so that's the view coming in on Ultratech on the charts, but let's talk about another stock in focus on the back of a brokerage note since this morning, and that's Petronet LNG on the back of a UBS note coming in. It's a positive note coming in. They've upgraded the stock to a buy rating from a neutral, hiked the target price to 400 from 320 rupees per share. They believe that the company is a beneficiary of India's increasing LNG dependence and expanding capacity at a time when India needs more LNG, something that, that UBS is also liking when it comes to Petronet LNG. Now, India has secured 5 long-term LNG supply contracts starting from 2026, and they believe that the Dahej unit could handle 19 to 20 MMTPA LNG despite competition from new terminals. So very bullish, very positive note coming in from UBS. It's a upgrade coming in from to a buy rating, and the stock is also up 1.3% as we speak.
All right, that's Petronet LNG. But coming to you, Jinay, for RBL Bank, that one is in focus today on the back of an Investec note that's come out. Tell us what does the note say and what are the details?
Well, definitely RBL Bank is in focus. Now, Investec has come up with a note. They have maintained their hold rating but have cut the target price to 170 from the earlier target price to 230. Now, what they believe is that RBI has terminated its co-branding card arrangement with BAF, which was its largest sourcing partner. Now, this move was likely prompted by increasingly stringent regulatory requirements for the co-branding partners. Now, they are expecting this headline credit growth to moderate by around 200 basis points to 13 to 14% year on year in FY25. They also see the corresponding decline in NIIs leading to a downgrade to estimates, and the growth is likely to now revive in second half of FY26 onwards as the bank scales up with arrangement with the new co-partners and the new co-branding partners. Now, overall, they remain cautious on RBI owing to its large exposure to MFI as well as credit card verticals. Now, if you look at stock performance, it did open a gap down, but a nice recovery we are seeing from the down levels.
Absolutely, that stock was deeply under pressure today, but nonetheless, it's been recovering slightly and now has tipped over to the green. But on that note, we'll slip into a very short break on Market Fatafat and keep it going with all the stocks on the other side. So you stay tuned, we'll be right back.
If you like this video, then like, share and subscribe to ET Now.